ETFs versus index funds, which one is better? That's what we're going to talk about in this video today. Index funds are one of my favorite investments, and recently I've started also investing in ETFs, exchange traded funds. Index funds and ETFs are pretty much the same in the way they're set up, except one big key difference, and that is how they're traded. Index funds are priced at the end of the day. So you're going to buy or sell an index fund at the end of the trading day. Now, ETFs can be bought or sold during an open exchange. So you're trading ETFs the same way you do single stocks. And because of that key difference, a lot of people really like ETFs because they have the flexibility to take advantage of any ups and downs throughout the market day. Personally, it doesn't matter whether you're investing in an index fund or an ETF. The key to investing is about keeping the costs low, and that's what you get through an index fund and an ETF. You typically will have low costs, and you're not going to get charged a lot of extra fees just to be able to buy and hold or buy and trade some of those ETFs or index funds. Now, when you compare the returns of the ETFs versus index funds, they both have generally performed the same, especially if you're going to look at an index fund like VTSAX, which is Vanguard's US Total Market Index Fund, and the ETF version of that, which is VTI. You're going to be able to see the last 5-10 years that they generally have performed the exact same. And that's because they have a strategy to track the same index. However, there's a lower barrier of entry with VTI. Typically, ETFs like VTI are going to be a lot cheaper to be able to buy into than VTSAX. In fact, if you go to Vanguard's website, you have to have a minimum investment of $3,000 to buy into VTSAX. However, with VTI, you can actually just buy one share of VTI for a little over $200. So you don't have to collect $3,000 just to be able to buy into the US total market. Now, if you're wondering which one is going to be a safer long-term investment, the answer to that is really depends on what index fund or ETF you're going to be buying and what strategy that index fund or ETF has. So you may buy an S&P 500 index fund, and then you may have an ETF that's investing in a commodity. And when you look at the long-term gains, typically the S&P 500 index fund is going to give you a better return than an ETF that has a strategy of investing in commodities. Now, it's worth noting that an index fund is a type of mutual fund that basically tracks an index like the S&P 500 or the Russell 2000. Now, on the other side, you'll typically find ETFs invest in all kinds of assets. So it's not just the index that you're going to be investing through ETFs. You'll be able to find an ETF that tracks currency, that tracks commodities. ETFs are typically flexible in the way that they're invested. So depending if you have an asset class that you're really interested in investing in, I would definitely look into an ETF that's going to give you a broader opportunity to invest in that asset class. So when it comes down to it, ETFs and index funds, you can't go wrong with either. It goes back to what I always say: stay diverse and keep fees low, and you'll do fine.